Good evening, all. Ira Epstein of Linn and Associates with your metals market wrap-up for this Monday, and we are now at June 29, 2020, about 5:40 in the afternoon. That is Central Time, which means the markets behind me have all opened. The stock market up again right now. It had a great day today. Another bounce. The question is it a bounce in a bear market that's topped, or is there more coming here? When we take a look at the metal markets, the gold market's popping back up, fighting a battle, and I mentioned it last week and I'll mention it again. 1785 area is very important. Silver trying to come a little bit alive here. The dollar today was up, weighing on the gold to a degree, and the euro failed. It got over the 113 area and couldn't stay there. In the pound, they are talking another $5 billion fiscal stimulus package, just so you'll understand that, towards infrastructure in the country. You had a big rally today in nat gas and not much going on in the bonds or notes. So on the gold, on a weekly chart, how they get up $10, must be something to do with the June gold going off the board, I'm guessing. That moves automatically. But that's where you're at, 1783. Remember, the market's going to drop one contract month, move to the next, and when it does that, it'll be up or down because it's a continuous chart. When you come to the August gold on the daily chart, well, you can see you're up your $1.90, and as you can see, the market still has the pattern of higher lows and higher highs. We don't know if this is going to be a high or not yet. We're only in the first 40 minutes of trading tonight, so it's too hard to tell. At this point, it's an inside day. The market is staying over the 18-day average, and when I said to you the 1780 zone, you can see where it comes in all the way across here. So those numbers, they're there, and that is the resistance area that you're fighting with. If the market can pop higher right now, the upper Bollinger Band resistance comes in at 1803.40. Why is that important? Markets trade within the black dashed bands that I've placed on the chart 95% of the time. The algorithm is designed to do that. So when the market rallies after a pullback, that is often a resistance zone. It doesn't have to go there, but if it does, I would expect stiff resistance, 1803.30. When we look at momentum, it's locked in. So I define this market as bullish. You have the embedded reading, and until it's lost, I say that the pros are buying this market on breaks the way you had over the past 2 days. It's been embedded. If the market continues up, the resistance zone, 1803.40, and because you're over the 18-day average, the bias is up. When I look at August gold versus SEP silver, it's a boring story right now, and I guess boring is better than when you soared up here. You still need approximately 98.5 ounces of silver in a perfect world to put into your shopping cart, push down the street to your local gold merchant, give that to him, and he's going to give you an ounce of gold. No commissions, nothing else involved, pure metals. When you look at what silver is doing, this is called a pipe. Now let me explain. This is normal trading. But the market started going sideways back here in very, very early June, and since then the volatility has dropped. The Bollinger Bands look at market volatility. They're going to look at the highs, the lows, and they will adjust themselves accordingly. The narrower they get, and the longer the market stays narrow and sideways within that. Think of it as a spring in a pipe. You keep cranking it up, the spring's not going to break. The pipe's going to give, the end of the pipe. Which way? I used to say it's a bottle on a stove. And you've got liquid in it, you put it down right onto the burners, and you've got glass that won't melt. The water in it or the wine in it or whatever you've got starts heating up, and as it heats up, it starts pushing on the cork, and it's either going up or down on the part of it when it comes out. It's rare that it goes straight. Can it? Of course, that's what a bullet does in a gun. But we're looking for the market to break out to the upside or downside out of that, and that's why I use the word the pipe. In the copper market, still bullish. The market is overbought. It's in a resistance area right here into the upper Bollinger Band. We've hit that a number of times, and it's acting as a resistance zone. But what this is also telling you is two elements. Number one, the world economy is picking up, because copper is not just U.S., it's all over the world. Number two, we know that supply questions have come into play out of Peru and Chile, as I haven't heard anything just recently, but COVID cases have been breaking out in the copper mines, and the unions are pushing on them. They want to cut production back or go on strike. I don't know where that's at just now, but the market's telling us it's still very much in play. In the platinum market, we've been drifting to the downside. We've been retaining any move to the up with the 18-day average of closes in red, and sometimes the 100-day. You get into two of them have been acting as a resistance. Is there anything here that can turn the chart bullish? Unfortunately, not immediately. This low is under that low, so even if you cross the high right here, you'd have then a higher high and a lower low. So not a very pretty chart picture. The palladium market is very, very similar. It gets down to the lower Bollinger Band, and as I've told you, pros take money off those bands, but I think when you're this narrow, it's a very difficult market to trade, as it doesn't take the trend and run with it very far. It's contained. Now you have a lot of resistance over the market of the upper Bollinger Band and up here, the 100-day moving average of closes. So those are stiff numbers. You'll notice on futures charts, especially here, I'm not using 200-day moving averages. Here's why, friends. In futures, the tendency is to trade the front months. I realize some traders, like in grain, so on, the spread traders, they'll go further out, a year, sometimes 2 years. But understand, they're going to a special market for that, away from everything, and trying to get somebody to make a market for them. That's where the floor operations come in. And while they don't exist, believe me, there are market makers off the floor. You put in a bid, you try to see who's going to take it for you on a certain spread, and there are people that just do that. So always remember that. But you're still in a resistance point in this market, and in the dollar index, this is the middle of no man's land. You try to go up, you don't make it to the band. You try to go down, you don't make it to the band, and you're just basically drifting sideways in an overbought condition. I think you just look at this market and say, gee, that's great. I don't think I want any part of it just here. That's just what I'm looking at. I like a trend, not sideways action. I imagine there are people that like sideways action. You know, I talk about all this in the morning with you at 5:40 in the morning, just about every single morning, unless something's wrong. I've already been up about an hour and a half, and I've read like a madman everything I get my hands on out of Asia, Europe. The idea here is to help you with your confidence of trading. We both know at that hour there aren't a lot of traders that are up doing too much one way or the other. I've already got a whole morning in at that hour, and I start recording and talking to you about 40 futures charts. I'm going to start you off first with technical analysis. Well, actually, it's going to start the other way. It's going to be a touch of the fundamentals. Then the tech, as we go through the chart, with specific. I want you to buy here. I want you to sell there. Here's the stop order. I'm going to be wrong. I'm going to be right. The idea isn't me. The idea is if you have an idea on your trade and I'm giving you something to think about it, isn't that worth the time and effort? Let's talk about the cost. Inexpensive. $7.95 to give it a try. Come on. You're a regular viewer already on this YouTube channel. Take the next step. See the real meat of what I do. How do you do that? Just go to our website. If you go up to the word research, when you go to the website, it explains how everything works. We even have a combo package, should you decide for that, of SPDR ETFs tied with this and just SPDR ETFs by themselves. I hope this helped you. I'm Ira Epstein. I will talk to you tomorrow. By the way, this week I am working on my Zoom, getting that all ready. I intend after the 4th of July now, I'm giving myself a firm date. I'm going to start Zoom meetings with my subscribers and then the general public. You have a good day. I'm Ira Epstein.